Ryan Haley here, and today I'm excited to be with our sales manager of Atlantic Shore Sotheby's International Realty, realtor extraordinaire, sales manager, wears lots of hats with our company, Stephen Diaz.
Hey everyone, this is Stephen here, and Ryan. Thanks for having me on. Always happy to join and talk market and real estate with you. So something we do quite a bit in the office. It's always fun to bring it to the general public as well. So.
Yeah, I mean, we're obviously, it's kind of one of the main things we focus on is what is going on in the market, what's going on in the real estate world, what's going on with real estate agents, what are the trends, and I thought maybe we would, kind of share our mindset a little bit with our listeners today. The first topic I kind of wanted to go over just came out here, one of the reports in early December, and that is the CPI report. Stephen, are you familiar with the CPI report?
Fairly familiar with the CPI, but for those that aren't, what is that, Ryan?
The Consumer Price Index. So this is a inflationary type measure reading that comes out to talk about how fast prices are increasing. And the good news, I think I would say, is that the Consumer Price Index number that was released here in early December came in actually lower than expected. So prices are increasing at not quite the rate, and were less than what the markets had kind of already priced in and what they were expecting. So what does that mean? What do you think that means for real estate?
So, it means a lot for real estate. Obviously, the Feds met yesterday as well. So again, mid-December, and the prime rate hike was a little bit lower than expected as well. So it came in at 0.5 basis points. So we're starting to see a little relief on interest rates as we, some people know, but a lot probably don't. The prime rate and mortgage interest rates aren't, totally tied together. In fact, they're sometimes semi-opposite. So we have seen a little bit of relief there in the past few days, which has been great. Otherwise, the CPI with coming in lower than expected, it's probably going to mean that our buyers are going to have a little bit more money in their pockets. The affordability is going to increase, something that we've seen being squeezed a little bit. So going to open up some new opportunities for both buyers and sellers entering 2023.
Yeah, I think it's just going to depend, how long does this take to shake out? But I mean, the Consumer Price Index is just one of the measures that the Fed looks at when they're trying to determine, where's inflation. And with prices increasing, at a little bit slower pace and not quite as what everybody had expected, that means that inflation might be kind of starting to peak. It might be starting to tame a little bit, which is great news because inflation is the enemy of interest rates. With high inflation, the only way to combat those prices, the main tool the Fed has is to keep raising those rates. So, it's been up in the air, after the last 4 Fed meetings, we've seen 3/4 of a basis point, 75 basis points, 3/4 of a point, 75 basis points has been the increase just month after month. And, ultimately that compounds,
Yeah, 100%. And I think, the Fed had come out even before this meeting and said they were going to stay aggressive with their rate hike. So I think, seeing them drop it by 25 basis points is actually a sign that we're definitely moving in the right direction, and probably a little bit quicker than everybody anticipated. As we know, inflation numbers have been coming out a little bit lower each time recently. So what the Fed is doing is working, which is the good news. Again, we don't know how long it's going to take to really get it tamed, but the quicker it happens, the better it's going to be for us as realtors, for the general public, not only keeping more money in your pockets and getting some more affordability back, but just being in a more stable market, a more comfortable environment where you kind of know a little bit more what to expect moving forward than what we have right now.
Yeah, and I think that's the biggest obstacle we have is this certainty. We need to, we all are craving certainty, and there's been some uncertain moves. And I'm certainly not an economist by any stretch of the imagination. I think we, us as real estate brokers and agents, we kind of have to, study the markets, and it's good to know the markets better than maybe some other folks. But my main goal is to try to take in as much data as I can, and then be able to share that with our consumers so they can make the best decisions. Ultimately, I think for the real estate world, I have no idea what the economy is going to do. I mean, I think one of the other concerns is they're going to push us into recession with these high rates, or maybe they won't. Maybe a soft landing. But I think if we just talk real estate, for a little bit. We've seen mortgage rates, although the Fed keeps raising the prime rate or the federal funds rate, mortgage rates have actually come back down for 6 weeks in a row now?
Yeah, about that. So we are, I was looking at a chart on, something our office uses fairly extensively is going to be Keeping Current Matters, which is just a great resource for not just real estate, but kind of the economy in general. And I think we're at the lowest interest rates we've seen since August right now. So it's definitely been a good move, and you're 100% right. Uncertainty is really what kind of shook the market in June when, interest rates were rising so rapidly. People didn't know what to expect. They thought those rates were, the hikes were going to continue to happen, which they have. And a lot of people now we're still talking to, the rates are getting lower, but they still think they could get lower, which is true. So a lot of what we're doing is educating people on, why it's still a great time to buy or sell right now. And we're seeing, a lot of mortgage companies come out with some products that can really help give people some security moving forward for when rates do drop, which is a great play. And, what we're trying to tell people is the rate shouldn't be the reason you're buying or not buying, right? We're focusing on payments. You got to find the right property for you, but really the rate shouldn't be what dictates whether you buy or not, because there's always a way to combat that, whether it's short-term or long-term.
Right. And I think people get fixated on it. Like you said, it's just they get worried. Oh my gosh, how am I going to have a 6.5% interest rate when somebody down the street had 2.5%? But to your point, I mean, real estate has always been. I mean, the number one driving factor in real estate is need. Where is the person at in their life? Where are they at in their career? And, maybe they just got married and, they are growing their family and they need some more bedrooms, or the opposite end of that where they've raised a family and now they don't need as many bedrooms. Right? I mean, or, there's life events that kind of get in the way and could cause you to need to do something in real estate.
Yeah, absolutely. We've seen it move from, the past 2 years. It's really been a want-based market. Prices were fairly low. Interest rates were super low. So people, they might have wanted to buy a new house. They might have wanted to move. But now we're seeing it more of people that need to do something in real estate. Like you said, whether it's a life event, whatever it may be, you've saved that money for so long to buy that second home. Now we need to do it. But can I just ask you a quick question if you don't mind?
Yeah.
The first house you bought, what was the interest rate?
So the first house I bought was an ARM, adjustable rate mortgage. I think it was interest only, and it was a 5-year 5/1 ARM. So that to go with a 5/1 ARM, it allowed me to get a little bit better rate than what I would have seen with a 30-year fix, and that was at 6%.
Wow.
So,
well, you kind of ruined my experiment because you're the first person that I've asked recently that could actually remember their exact interest rate when they bought their first home.
Sorry.
So, I bought my first house, gosh, I can't even remember, but it was, about 15 years ago probably. And honestly, I don't know what my interest rate was. And I asked a lot of agents in our office that own real estate, what was the interest rate when you first bought your house? And no one could tell me. So, the fact that, I totally get it. The interest rates squeezed affordability. They made it difficult to maybe get the exact ideal house you wanted. But you're not going to remember what your interest rate is unless you're Ryan, more than likely, 5-10 years down the road, but you're going to remember that house, the memories you've made, the times you've enjoyed it. And then, what everybody does, what does everybody do with their interest rate? You're going to refinance it eventually,
right?
Whether it's because the rates have dropped, whether it's because you want to pull cash out of the property and use your equity to advance yourself in life, you're not going to be stuck with that interest rate for 30 years more than likely.
Right. And honestly, it's funny you say it because I don't know any of the other mortgages or refinances or other investment properties I purchased. I can't tell you any of the rates since then, but I remember that first one. I don't know why. I guess I was fairly new into real estate at that time, and I was paying attention to everything. But ultimately, you're absolutely right. I mean, I remember those Christmases with the kids and the somebody breaking a wrist on the trampoline, or any of those things that had gone on in that home, which we still own today and has now become an investment property. So long-term wealth, right? You buy that first house and it's your primary, and then it becomes your investment property. One other stat, and this is going off a little bit, but an interesting report I saw this last week was that like 25% of the people that own their home today are not happy in their home. Like they would love to make a move. They'd love, and it's not that they're not happy, but they would love to do something. But they feel a little bit like the interest rates are too high. They're held back a little bit by that uncertainty. And I just find that fascinating because there is so many opportunities out there right now if you're willing to make a move on it. And we can probably work out some way to get you the lowest rate possible right now.
Yeah, 100%. I mean, we're always looking to put our agents in a great position, to put our clients in a great position by, talking to lenders, by finding products that are out there, by watching the MLS and giving our agent or our clients a heads up, like, hey, this property's been sitting a little bit. You can probably negotiate a little bit off the purchase price, or maybe get some money back for, and maybe I'm getting too lender termy, to financing, but a 2-1 buy down, which is one of the short-term reliefs we have right now, where you buy the seller for the buyer buys that rate down for 2 years to put them in a more equitable position, with the intention that when the rates do drop, they're going to be able to refi into that lower rate for the rest of the life of the loan. So yeah, I mean, I think there's tons of opportunity. It's not like it was 10 months ago, 12 months ago, where, I might show a client a property on Saturday at 10 a.m. and tell them that if they want to make an offer, it's got to be in by 2. Now buyers can come look at the property. They might have a few days to think about it. So it's a great opportunity for buyers. But on the flip side, sellers are in a great position as well. Our inventory here in the markets we watch is still extremely low, pretty much hovering between a month to 2 months worth of inventory in the 3 largest counties we serve. So, as a seller, there's less competition out there. So your house is going to have potential to get seen more and to be higher on people's lists than when there are a lot more pieces of inventory to choose from.
Right. Yeah, that's the interesting factor right now with it doesn't necessarily go with your typical supply and demand, but I mean, there's less, less available right now. We obviously saw the number of sales down a fair amount this year, but prices have held, and so from a seller standpoint, I mean, when there's less competition, that's when you can really shine. You stand out from the crowd, and the fact that prices are still high, it's a good time to get the property out there and get it sold.
Yeah, absolutely. I mean, both of us have recently launched some new listings that are getting attention, heavy traffic in open houses over the weekend. So they're definitely getting a lot of eyes on them right now, even though, there's been a lot of doom and gloom about the market crashing. I mean, we're not seeing that. To your point, prices have held. We're not really gaining inventory on a weekly or monthly basis. And, one factor that a lot of people aren't really taken into consideration, I don't think, right now, is foreclosures are at like an all-time low. Foreclosure starts. So, that's going to keep prices growing organically because we're not seeing a lot of forced sales.
Right. I mean, I think what it comes down to is there's opportunities out there. The underlining factors still seem to be fairly healthy in the real estate market. I think we're going to have even more opportunities as we go into 2023. And if you've been thinking about interest rates and you're looking at affordability, you might want to take another look again because you might be surprised that rates are down a fair amount compared to just even a month ago. So.
Yeah, absolutely. And I think if you're a buyer, you're a seller, the time to move is probably now. The waiting game should be over because there's people out there looking for property. It's not to a total halt like some other markets. So it's still a great time to be in the market. If you want to do something, absolutely. I think in the next 6 to 12 months, this might be the sweet spot for both buyers and sellers.
Yeah, you can get out ahead of the spring market here a little bit before the masses come back. So we're closing out 2022. It's been an interesting year, still a strong year, exciting year for our company. Looking forward to a great 2023 and the growth potential and in helping lots of clients help find properties and sell properties here at the beach.
Yeah, absolutely. If anybody, has any questions about real estate general or more specific, I mean, they can always reach out to our office. One of our agents would be happy to connect with them. We're in the business. We like to create a safe space for our clients to be able to make a decision. We're not going to twist arms or bend facts one way or another, but we want to prepare our clients and really just educate them on what's going on and give them a safe space to make the decision that's best for them. So if anybody has any questions at all, don't hesitate to reach out to us.
No, I think it's fantastic. We're here for you. That is going to wrap us up here for this episode of Running Real Estate. We thank you for tuning in. We'll continue to deliver great content to you on a regular basis. Please like, subscribe, share, and we look forward to seeing you here next time. Steven, thanks a lot for joining us.
Hey, Ryan, thanks for having me. And yeah, look forward to the next one I'm on.
Sounds great. Thanks, guys.